Welcome to the AccendoTraders Group. This is our weekend rapid report for April 27th, 2008. AccendoTraders.com. Effective trade plans delivered daily. And for our new people to our video, this is what we go through each day. We do have a couple of changes on the weekend. We do look at the sectors a little bit more to find out where money's going in and out. And we do recommend that you read some blogs. Certainly there's my blog, and there's plenty of other blogs out there, other newsletters out there that you can participate in, news groups that you can participate in to get a feel of where some of the experts are calling for the market to go. You can see where the Dow and where our move was. We were up for the week, but when you compare this to 2 weeks ago, or the week prior to this, where we were up hundreds, Dow was up 400, and Nasdaq, and so what we really had was a good consolidation week here, and that's okay because we talked about, and we're going to talk more about today, that the market is at a key resistance level, especially the S&P 500, and we need to see who's going to win, the bulls or the bears, which way we're going to go. Next week at this time, will we be talking about the breakout into new highs, or we're going to be talking about the push down back to the March lows? So there, so again, we had very light economic data last week. Earnings really were the focal point. I thought it's important to note that retail was the biggest mover, probably in anticipation of the rebate checks, which are actually going to be sent out a week earlier. We don't have anything on Monday, consumer conference on Tuesday, but booyah! On Wednesday, we have the FOMC policy. Will they cut? Won't cut? Are we going to cut our way out of this potential recession or recession, however you want to look at it? But what are we doing to the dollar? So, I think obviously people are going to be leading towards that FOMC policy meeting on Wednesday, and also the jobs report here on Friday will also be very important. Tomorrow, we don't really have any economic data. However, we do have Humana and Verizon before the market, and we have Visa reporting their first earnings since their IPO. We do have some banks, and we know sometimes the banks, when they miss, have affected the market. This week, however, when Ambac and Shore reported bad earnings, the market took it as half full instead of half empty, which is good. That means the bulls were holding up. But on a day with not a lot of news, maybe those negative reports, if it's negative, will have a bigger impact. And we still have our COF split and our WFT split. So let's go ahead and take a look at these sectors to see where the money's going. Okay, so as we look at our sectors and see which sectors are moving up and down, we can see that, remember we talked about this week was really a consolidation week, and we're going to see that in some of our sectors here. And you can see we have hotels. Last week we said they were bearish, and you can see we actually rallied this week. Great volume. So if the hotel sector can break above the 50, certainly have some bullish plays coming on there. If we can break the 50, 50 has been a resistance. We have the basic materials bouncing at the 20. Several stocks and sectors are doing that. Certainly a little concerned about what happened here in the middle of the week, but I'm definitely still leaning bullish on basic materials. Utilities, kind of a consolidation pattern there. Builders, same thing. Casinos, even though we pulled back to the 20, still going to lean towards maybe some bearish plays for casinos. We'll see. Coal bouncing at the 20, holding on to this uptrend line here. They're still holding on to that. So I'm still leaning somewhat bullish towards coal, but I may wait until they get another couple more days up before I actually get anything. It's kind of aggressive to get into there now. Biotech, not really doing that much. Not biotech. This is the bank sector. And the good thing to talk about is that we did break the 50, but we broke the 50 here and pulled back. And even though the market may have a half full versus half empty with the banks, I'm still not ready to go straight bullish for them. Here's the NASDAQ. You can see that we're still in a consolidation pattern. Certainly leaning towards bullish. We had a good week. But you can see you probably really need to get to around 2444, 2450 to really go, all out bullish. But certainly a good week, and again, a consolidation week, side moves. The Dow, we already know the Dow has been bullish before the rest of the sectors. again, down, kind of sideways, modified rising 7 pattern there. Still holding on to this resistance of the original short-term uptrend line, but definitely leading bullish. Here's our drugs. Also, at the 50, if we can break the 50, maybe some bullish plays. Our best sector is internet. Got a modified rising 7 pattern going on here. Definitely would like to see confirmation of that, and we'll look at that. Amazon, the eBays of the world's price line. Gold is, I'm still going to lean towards maybe some bearish plays on gold, as the market is possibly finding a bottom, and we could possibly see the gold continue to go down. But if the dollar is weakened by more rate cuts, we may find a bounce. But you can see that there's definitely support here for gold. Software also looking very nice. Got a rising 3 going on here. Definitely like some software plays. Insurance, Here's oil bouncing off the 10. This might be a good time to get into oil, especially if we look at this, anytime it hit the 10, it took off again. So this might be a good time to look at the oil. So we'll look at that at our plays for tomorrow. Retail looking nice. Again, possibly anticipation of the rebate checks. They came out a week early. So maybe we can look at some of the JCPenney's and the Kohl's and the Sears. Stocks continue to look good. That's great for the NASDAQ. S&P 500, and what's important to see that we finally did break the downtrend line, broke back into this, but we really, 1400 is the number we're looking for. Once we break into 1400, that really confirms the bullish move for the S&P 500. It's good to see the transports holding up with the higher oil prices. Brokers, liking the brokers. Natural gas looks great, and oil. So bullish. Okay, so now we're ready to go on to our educational portion of our video. And when we last met, we were talking about the metamorphosis of a trader, the stages that we go through from inconsistent to consistent traders. And who among us has not been in a trade that we either stubbornness kept us in too long, or anticipation in the, I got to get it, had us get in too soon. The best traders probably make their money in between 20 and 80. They don't try to buy at 0. They don't try to sell at 100. They stay in the range and just keep making profits. But many of us, because of our emotional wanting to get in, we try to get in at the bottom, and maybe it was too soon, or we try to sell at the top, and maybe it was too late. So when we have these experiences, and when we have a trade that either we believe in or our system has set up for us, when it goes against us, when it doesn't work out, whose fault is it? Is it the market or is it the trader? Well, again, we've also been talking about accepting risk, in that when we place a trade, we have to accept the fact that the trade may not work out. The market is neutral. It's just data. It's just ticks. It's movement, stocks going up and down, companies going up and down. And the market's not able to control how John Smith across the world interprets the earnings of your company. That's why we always say don't hold over earnings when you're trading. Now, when you're investing, that's different. But short-term trading, we say don't hold over earnings. Why? Because you never know. We had Google and First Solar the other day, and they both beat. But Google was up $70 and First Solar was down $70. Well, why is that? I don't know. You never know how people are going to interpret the same information. It's sort of like that game we used to play as a kid, where you pass a word down and you want to see what it turns out to be when it comes down the end. It's like that. Or if you ever had people read an article and they come back with different experiences or different what they saw or what they read, when they're sharing, they say different things. Well, that's because they've all had different backgrounds, and they're going to interpret that information that they've read with their background experience, and they're going to see different things. So because of that, and because the market is neutral, why is it that people, hold grudges against it? Why do people, those market makers, why is that? And at the bottom, you can see Mark Douglas calls that faulting trading attitudes and perspectives. And these faulty attitudes garner fear, and people get mad at the market, and they're scared of, well, I should get in, but I don't know. And instead of building trust and confidence in their system, we lose confidence in ourselves. And again, we make a system so that we ourselves don't have to do it. So, we're going to continue to talk about this. As always, we want to thank everybody for watching. There's the link to the full version in our podcast in iTunes Store. Always, we're still getting feedback, so if you can take the time to give us feedback, we greatly appreciate that. And go ahead and take a look at some of the blogs. I'm going to continue to put some of the Mark Douglas stuff up there and some of the stuff about trade plans up there, so check out the blog. And as always, trade at your own risk. I will see you guys tomorrow.